If you're holding cash or stacking silver, you're probably asking the same question. Where is safety right now? When markets swing this fast, comfort disappears. Today, we're breaking down silver versus cash in a market that refuses to sit still. Let's start with what just happened. Silver didn't move quietly this week. It swung hard alongside gold and the broader market as traders reacted to stronger economic data and a firmer US dollar. When volatility picks up, silver tends to move more aggressively than cash because it trades in open markets. But cash does not move that way. $1 in your account is still $1 tomorrow. Silver, on the other hand, trades minute by minute based on expectations, based on inflation, interest rates, global demand, currency shifts. The key takeaway is this: silver reflects the temperature of the market and cash reflects stability, but stability comes with its own trade-offs. Let's zoom in. Why did silver react so sharply? Because inflation data and Federal Reserve expectations still drive pricing. When inflation cools more than expected, investors begin adjusting rate expectations. That affects the opportunity cost of holding metals versus cash. The latest CPI report showed inflation rising less than expected, and that shifted market expectations around the Federal Reserve's rate path. When rates are high, cash earns yield. Money goes where it's treated best. That makes holding dollars attractive. But when investors believe rates may fall later that year, precious metals often benefit because the cost of holding them becomes relatively lower. This is why silver and cash compete. They're constantly competing. Cash is steady and pays interest when rates are elevated. Silver does not pay a yield, but it can respond strongly when monetary conditions start changing. Now, here's where perspective matters. Even though silver can swing wildly week to week, long-term structural demand has not vanished. Investment flows and supply conditions still shape the big picture. Recent industry reporting indicates global silver supply has remained tight relative to demand, and that's really an understatement. This is the fifth, probably sixth year running where we've had this deficit in the amount of silver available compared to the demand. That doesn't mean prices move in a straight line, though. It means that short-term volatility doesn't erase long-term forces. That's what it means. Cash protects you from swings, but it does not adjust upward when commodity markets reprice. Silver can drop quickly, but it can also rise quickly when capital rotates. This is exactly why I diversify my investments. I want to thank Massivo Gold and Silver for sponsoring today's video. Their ticker's on your screen. It's TSXV, MASS, and OTCQB, GNYPF. Look, smart money is positioning for higher silver prices, and they're doing it through this under-the-radar stock. Silver is in a structural bull market, and Massivo Gold and Silver offers early-stage exposure at a moment when pullbacks are creating opportunity. Silver's been one of the strongest performing assets heading into 2026, up more than 250% over the past year and surging roughly 50% just in January alone. Yes, it's cooled off, but it's cooled off with the broader market. And historically, these pauses after major rallies, they've marked strong entry points. This silver move is not just speculative. It's being driven by real supply and demand pressures. New mine supply has struggled to keep up with industrial demand, and it continues to accelerate. Solar panels, electric vehicles, electrification, grid expansion, it all relies heavily on silver. At the same time, a weaker US dollar and rising geopolitical uncertainty, they've pushed more investors toward hard assets like silver. HSBC expects the global silver supply deficit to widen even further this year. That's reinforcing the long-term bullish case, certainly the way I see silver. Now, while owning silver matters, junior silver stocks often offer far greater upside. When silver rises 2 or 3 times, strong exploration companies can move 5 to 10 times or more. Massivo is a small, drill-stage silver explorer operating in proven mining jurisdictions in Mexico and Nevada with a low share count, a market cap around $10 million, and active drilling underway. Even modest success could significantly re-rate the stock. Adding credibility to this, respected mining investors including billionaire Eric Sprott and industry veteran Michael Gentile, they've taken positions. And when investors like these get involved, the market tends to pay attention. You can tell I'm excited about this company. Perform your own due diligence and check out Massivo Gold and Silver. Check the links in the description. Their ticker's on your screen. It's TSXV, MASS, and OTCQB, GNYPF. Check them out. I know you'll be as excited as I am, and I'll see you on the next one.